And welcome back to Broader Financial Future, everyone. Hopefully, you're doing really well. Today, I'm going to talk about 2 dividend stocks to buy right now, or at least add it to your watch list. You don't want to miss today's video, so stay tuned. And just a disclaimer, I'm not a financial advisor. This video is strictly for entertainment purposes only, and any investment may involve risks, so it's important that we always do our homework when we invest in anything. Now let's jump into today's video. So I have a good one in store for everyone today. I found 2 dividend stocks that should be added to everyone's watch list. And the first one up is Procter & Gamble. Yes, Procter & Gamble, ticker PNG. Now, Procter & Gamble is a dividend king, so that means it's one of the best in S&P 500 stocks. Now, it's in the sector of consumer defense, and the industry is household and personal products. Now, P&G raised its dividend for at least 50 straight years. That's older than I am right now. So 50 straight years in a row, they raised their dividend. Now, the consumer staples giant has paid dividends continually for 131 straight years. So not only did they raise their dividend for at least 50 years, they paid a dividend for 131 consecutive years continually. So that's really big. That's like over a century. So their dividend is pretty reliable. So you heard of a dividend aristocrats? This is actually a dividend king, which is above that. And it raised its dividend for the 65th straight year this April. So P&G maintained that stable streak through numerous recessions because its business is well diversified. It serves more than 5 billion consumers across 180 countries with 65 well-known brands, including Tide, when you have those dirty clothes, Pampers for the kids, Tampax, Charmin, Oral-B, Pantene, and more. So they have a lot of huge brands that you might consume on a daily basis. So if you use any of these brands, why not pay yourself and be an owner in this company? Now, demand for those products generally remain evergreen through economic expansions and contractions. So these products, regardless of what's going on, they pretty much remain in demand. And the reputation of those brands often grant it pricing power against lesser known brands. Because at the end of the day, would you rather have Tide or something else? When you're washing your clothes. So brand recognition really matters as well. Now, P&G acquired and divested many brands, but it consistently tries to return most of its free cash flow to investors. So they do buybacks and they give us dividends if you own this particular company. It reduced its outstanding share count by 11% over the past decade. So they've been really buying back their shares heavily, and it spent 50% of its free cash flow on its dividend over the past 12 months. Now, it currently pays a forward yield of about 2.6%, depending on where you watch this video, give or take a point or so, which is much higher than most banks. So if you have your money in a savings account, this is definitely higher than that. Now, P&G profited from last year's events. Induced shopping trends last year really helped out this particular company. But analysts still expect its revenues and earnings to rise 6 to 10% respectively this year. The stock is still reasonably valued at 23 times forward earnings and remains a solid long-term income investment. Now, let's look at some of the trends here. And it's trading below its 52-week high of $146.92. And it's also trading below the one-year target estimate by Yahoo of $147.94. So it's still trading at a discount. Now let's look at its moving averages when it comes to P&G. Now when I look at the 50-day moving average is $135 and the 200 is $133. It's trading right around the moving average. So I typically like to buy a stock definitely below the 52-week high. I never want to buy something at its premium unless I really believe strongly in a company that is going to continue to go up. I typically like to buy below the 52-week high, in addition somewhere around the moving average the 50-day moving average or 200-day moving average, which is kind of hovering in between those numbers. So this is definitely a quarterly dividend, definitely a company that's on my watch list that I plan on buying in the future. And the next company on my list is actually Best Buy. Now, this is a retail company. Now, Best Buy, ticker BBY, which once struggled against Amazon and Walmart. I really thought they weren't going to make it, but they have. Between 2012 and 2019, their CEO, Herbert Jolly, fixed its outdated inventory system, improved its employee training, expanded its e-commerce presence, and rented out its floor space to top brands as stored in stores. So that's very key there. Really, at the end of the day, you want to have good employees that's trained well. You want to make sure you really build out your e-commerce, because that's really where a lot of companies are going to really benefit from. But in addition to that, just having store in stores as well. That's another way to lower the cost when it comes to your retail space. Now, in addition, Best Buy also matched Amazon prices. So really, whenever I actually go to Best Buy and there's something that I like and I want to buy, before I buy it, I always just do a quick Google search. And if I find it for cheaper, I just let them know, and they basically lower the price for me. So quick little hack: if you're at Best Buy, you're trying to buy a game or whatever you're trying to buy, just do a quick Google search and see if you can find a cheaper price as far as from like Amazon, Target, or so forth. So that's a quick little hint there. So basically, by the time the CEO, Herbert Jolly, handed over the reins to Corey Berry, Best Buy was growing at a healthy clip. So they were doing pretty good. Unfortunately for Berry, she quickly faced some major tests last year, like most companies. However, Best Buy kept most of its stores open and benefited from the stay-at-home trends because most people wanted PCs and consumer electronics. So especially when everybody was transitioning to work from home, you didn't want to wait to order a computer. A lot of people went immediately to Best Buy. Now, the digital foundation they have built over the years also easily handled the surge in online orders, and as a result, Best Buy revenue rose 8% in fiscal 2021, which ended this February. So Best Buy still looks cheap with a P below 14. Best Buy continues to pay its dividends throughout the crisis and raised its annual payout for the 8th straight year this February. It spent just 17% of its free cash flow on those payments over the past 12 months. So it has plenty of room to continue to raise its dividend with a dividend yield of about 2.5%. So Best Buy, a lot of room to grow. The dividend is looking pretty solid. Let's break it down even further with some of these additional numbers here. So when you look at the Yahoo one-year target estimate, it's trading below the $124.59. So it's trading below its one-year target. Also, when I pull up the 52-week high, it's trading below the 52-week high, and it's currently trading right around or a little bit below the 50-day moving average, but a little bit above the 200-day moving average. So it's still at a fair value, especially at its current PE ratio, in addition to its dividend payout. So a lot of room to grow, so a lot of opportunity with the growth of the stock and the dividend as well. So if you like Best Buy, if you like going there, this is another stock to possibly consider. Why not pay yourself when you go shopping at Best Buy? So those are my 2 dividend stocks picks for today. Let me know, do you own Procter & Gamble or is Best Buy? Do you even buy any of their products either from Procter & Gamble or Best Buy? Do you like to shop at Best Buy? Let me know, what are some of your favorite dividend stocks? Or what are some of your favorite stocks overall? Don't forget to subscribe. It really helps out the channel. And if you're new to investing, I do have links to Webull, Robinhood, and One Finance. So you can click one of the links at the bottom. In addition, I do have a link to a investment tracker. So if you like pen and paper, you just want to kind of write down when you buy and sell stocks, there's a link down below where you can buy that book. Other than that, that's all I really have for everybody. Hopefully everyone's doing really well. Until next time, everybody, peace.